traders, Nick Shaheen here, MarketFi, create income with option spreads, Benzinga. I wanted to recap today the week ending 220. Thanks for joining me. It's going to be a few minutes. I'm going to run down a few names, but before I do that, looks like okay. The SPY, the markets has pretty much recovered from that whoosh we had, and some of the scary thoughts have abated, and it looks like some clear sailing, but not full speed ahead. I don't see a lot of commitment from the bulls yet, so I'm a little cautious at that. Some of the things I had on my screen all day today were obviously, the ES and the small caps. I like to put them up here, so I'm always just gauging the market, how it's going. Also looking at Google, I kind of challenged Google this week and I won. I did an iron condor on there. Kind of a complicated iron condor position, and it won on all counts. It was a nice win without too much sweat. I closed it early just to be safe and have a win on my hands, so I didn't take it to full max profit potential. Apple I did not touch today. I have not seen it recently been able to withstand 2 days of negativity. I mean, at least end the negativity in one day. So yesterday was enticing. I didn't jump in, and ta-da! Today. Plus the option told us the open interest this week told us that first of all they rejected the 550s real quick, and that the 540s were going to be real tough to break, and there was no real support below it from the open interest at least. So I did not touch it. Why try to catch that fallen knife yet? I do like it mid to long term though. Price line, woohoo! Anyway, yesterday, middle of the afternoon, I should say, I said, okay, 13.18. I see the pop on price line, and sure enough, it was that was a key level today, and it closed a little below that, but it kept bouncing at that level. If you see that, every bounce was around the 13.18. So lucky guess, I guess. And at the open, I sold an iron condor in it just for the day, and somebody challenged me that I lied, so I sent them a picture of it. It wasn't for a lot of premium, but I didn't even have to watch the screen all day for it. Pretty good luxury to have in an iron condor that expired the same day in such a volatile name, I would say. So smaller premium, higher contract, who cares what it happens in the plus or minus $20 in between. LinkedIn, I'm still eyeballing. Anyway, let's go to a stock rundown of some of the things I was looking at today. I want to start with Amazon. I like the bullishness, obviously, of the company. I don't like technically what I see. However, I see that it's defending this line right here quite well. So next week, I'm going to look at the open interest and see what the option market looks like, and then I may decide to go along with a probably credit put spread somewhere around here or here. Depends on the premiums and depends what I see from the open interest. I don't want to jump in too soon. I almost did yesterday. Had I done that, and then had I closed it on the open, I would have booked a little profit because it showed some promise today, but it failed to keep it. It closed lower. So that's one of them. BlackRock I keep on my list. I'm not sure why. I haven't traded in a while, just because I guess I want to touch the bank somehow, and it qualifies as a small bank, or somewhat of a bank, not a small bank. So, but it's still, I don't like technically what I'm seeing, so I'm still standing out. Lower highs, and it's knocking on this floor. Is it going to be a trapdoor or not? Not sure. Don't want to jump in right now. Indecision right here, and a bad candle right here. So definitely stay out of that next week, regardless of what the options tell me. Maybe I'll even take a put or put spread in it. If the market sells off, it'll be down. Definitely. I usually look at VMware. No trade for me there as of today. It's still trying to break out. Obviously, it broke out from severe lows, but it keeps promising, and sometimes it fails to deliver. So at this, I guess what I'm saying, at this rate, at this level, no conviction in going long. If I went long, I'd be such a weak hand, so I'm not going to do it. I'd rather wait for another dip. If I missed it, I missed it. Wait for another dip and buy it, go long. Ralph Lauren, same deal. I need conviction, and the retail have been so tough. One day it's good, one day it's bad. By good and bad, I say one day they hate it, one day they love it. I don't like that it's banging up against this level right here, and that if I extend it for more years, not 4 more years, for extra years, you see that's a pretty important level. It seems to be pivotal one way or another, from here, up and down. So I'll wait. If the market's not sure, like I say always, I'm not smarter than the market, so I'll wait as well. I don't want to jump in and grab a handful of something ugly. Apple, we already talked about it. It is also at an important point, but I think that the puts will stand. That if I sell I'm confident selling the 500 puts because the market, well, the market and it came to its defense at 505. Unless the market in general tumbles, I think they'll stand. I haven't sold them yet. I'll wait until Monday to see the open interest. Monday, Tuesday, and then I may commit some money there on the long side. Maybe even a credit put spread to be a little cautious. And I'm not sure I want to do any credit call spreads against them because there's the headline potential as opposed to the whoosh downwards. I think that sellers have seen that they've defended well the 505, so their conviction in selling it will abate as it approaches that level. That's my take on it. I could be wrong. LinkedIn, man, that heartbreaker. I keep trying to jump in, but it shows me, and then it weak. It shows its hand, and then it backtracks a little bit. I do want to go long it, but gosh, it's such an important level, and that I don't see anything below that. I wanted it at 180 to go with a credit put spread to take option, or maybe take some call spreads to be bullish on it, but or both. Sell the credit put spread, take the credit put spread for credit, and to finance a debit call spread. So that would be a super bullish position, right? Because I'm taking two long positions, one to finance the other, betting on the long side. So 180, if it goes down to 180 again, I will do that. Right here, I may just do a credit put spread because my conviction is a little less than at 180. But it's looking not bad given given the potential that it had. MasterCard, I'm still waiting to pounce out. Visa behaved a little better, and like I say, the market is not sure with a doji there. And if the market doesn't know, I'll wait. I don't think I'm going to miss anything. Premiums weren't that attractive. I looked at it a couple times. Priceline I've already talked about. I don't have any long-term positions. I jumped in and out today, just all day at the open. Crazy premiums. Everybody taking it left and right. I jumped in with an iron condor, sold it for credit. Small credit, but the return was excellent given I didn't have to watch it, and it was just one day. Goldman Sachs, again, I want to go long it. Maybe now it's approaching levels to where it's attractive for me. Not just levels and timing. It's a good company. It's approaching the 100 day, and every time it does that before, there was the downside was limited after that. So here's one time, here's another time on the upswing, I should say. The it defended it here, and here again it broke out. So maybe I can grow a set and take it long from here, but there is no rush, and if so, I'll probably do it 2-3 weeks out, so I don't have to sweat the little gyrations, and then that makes me a weak hand. Panera, oh boy, it faked me out quite a few times, so I guess I missed it. I thought it was back to old habits. I told my fellas that, hey, it's back to old habits. It's going to break out. I thought that candle was pretty ugly. This candle was pretty ugly because it couldn't hold the high. So I thought it was right here. It was going to revert, but guess what? It didn't. This is a pretty good, healthy candle today. So I may have missed it. I can't get in now. So I'll wait. For the third touch, maybe if it drops down. Wishful thinking to here, there'll be 3 touches on some sort of a cone. Technicians out there will know what I'm talking about. Oh, say, you guy crazy. But I can't touch it right here. Maybe put spread, but I don't like to bet against the market too much. But if I have too many long positions, this will be a place where I can take a put spread as a hedge against my other long positions, and they don't have to be in Panera. CMG, speaking of Panera, Chipotle, I haven't been able to trade it in a long time because it is in a wait and see mode for such a violent move stock potentially. Every move it makes is gobs and gobs, and the premiums are not sexy enough for me to jump in. And look at indecision all over the place. So no one has any conviction either way, so I'm not one to be brave to do that. ISRG, almost in the penalty box because I just, same deal, very violent moves. Big loser this year of past 12 months, but I'm trying to regain courage in going long it. I never liked to take credit call spreads in it, always credit put spreads. So maybe I'll do a credit put spread down here and then a small, shorter period of time debit spread as far as put to guard against a big whoosh move down. I'm not sure, but if it's taking me that much to jump into it, I guess I should stay out of it. CF Industries, just to cover everything almost. I like to trade that stock. I just want that pop from the. That is one massively ugly candle. I mean, look at that when it opened after the earnings. Yes, it did gap up, but boy, it was way up here, almost 250, if not that, and then dropped all the way down to the opening almost. Two healthy candles to make up for half of what it lost that one day. So that's really good. But again, at that level, I am more comfortable doing a credit call spread up here, shorter time, than to go in with a bullish position. So I may do a credit call spread this week, coming week, just in if the premiums still are attractive enough for me to do so as far as risk reward. Cat and Cummings, I just couldn't do anything with them this week. So this will be the rundown. So in general, I'm looking to be optimistic this coming week, but not overly optimistic, meaning I don't see doom unless new stuff comes up. What we have on our hands is something that we've seen and we know about, and we know we're comfortable with the consequences. We, as in the market. However, if something new comes up, then we may change our mind, and that new thing is not there. Kiev's situation may have been evaded today, or averted today, or at least lessened because they came to a term. Let's see if they hold up with it. The Asian markets will tell us a little bit over the weekend, but I don't anticipate anything. There's no major scheduled news for next week, so it should be a grind, meaning we may inch up a little bit, but the doom scenario that everybody expects is not there. Having said that, I'm not holding too many longs over the weekend just in case. So I will talk to you next week, and hopefully you have a successful week trading.